Hello and welcome to today's video. In this video we'll be looking back at how my stocks and shares ISA performed over the month of October. I'll also be revealing how much I won from my £50,000 worth of premium bonds this month at the end of the video, so be sure to stick around for that. Last month saw my portfolio tank. The dream team that was Liz and Kwasi scared the bejesus out of investors and nearly sent the country into a financial meltdown.
Sad.
Unfortunately, we are far from free of that meltdown. It was nice to see King Charles be the mouthpiece for the UK though. Once that bin fire was out of the way and the new PM in place, the markets did begin to bounce back. We are far from out of the woods though. We have just seen the Bank of England rise rates to try and rein in inflation. It also warned that the UK is facing the worst recession since records began. With the last mini-budget having a very negative effect on the UK's reputation, it will be harder to secure our debt at more reasonable interest rates. With a slowing economy, we will also see less money being raised from taxes as people will tighten their purse strings, which leaves the government with some very tough decisions. Whether you're a fan of Rishi Sunak or not, I think you'd find it hard to argue that his intention is to help those in need, as this clip shows.
I managed to start changing the funding formulas to make sure that areas like this are getting the funding that they deserve. Because we inherited a bunch of formulas from the Labour Party that shoved all the funding into deprived urban areas, then that needed to be undone. I started the work of undoing that.
He is a smart man though, and I have a feeling he'll have a good idea on how to keep the coffers just full enough to keep the country ticking over. So if taxes are falling short, then where could the UK bring in much needed income? John Maynard Keynes observed that by a continuing process of inflation, governments can confiscate, secretly and unobserved, an important part of the wealth of their citizens. This quote was from over 100 years ago, but still feels just as relevant today. It's scary when you read quotes from over a century ago and think this could have been written yesterday. I can't help but think we should have come further than this. This could spell real trouble for the foreseeable future, but that's not to say there won't be opportunities when it comes to investing. For me, I'll be looking to start diversifying more, as I still feel overexposed to some markets. As I plan to hold any shares I purchase for a long time, it's not such a big deal, as I feel in the long run there are a lot of gains to be made, but we are seeing some big household names in real trouble of late. For example, Made.com, who have had their shares suspended and have had to call in the administrators. It will pay to be very cautious if you are looking to snap up some bargains. If we see a big recession or financial collapse, then we may see some companies suspending their dividends. Please bear that in mind when planning ahead. I did make a video recently about the best easy access savings accounts on the market currently. Rates are massively on the rise, so they may have changed since making the video, but I did include some tips on how to build wealth. Unfortunately, none of the accounts will negate the eroding effects of inflation completely. But if you think of your savings as a house precariously perched on the top of a crumbling cliff edge, the best rate will act as the sea defences, slowing up those eroding effects. It just gives you that little buffer, which might make all the difference a few months down the line. So let's start diving into my portfolio. I'll start with income, as that's normally a nice positive start, but October was pretty dire on that front. I received nothing in the way of dividends, and again loyalty bonuses were minimal. If we take a look at the payments over the year though, you can see the impact of no longer receiving one from Fidelity. I am due a dividend from Centrica in November, so hopefully that will help bring my monthly average back up. Although I don't hold a lot of them, and the yield is very low, so it won't be a big payout. It might just tip my income balance above the £10 mark though. My income is set to reinvest when it reaches the £10 mark, but I'm not certain how that works when the £10 is made up from lots of small payouts. When I've received dividends from my larger holdings such as Legal & General, that dividend has been reinvested back into Legal & General the following month. Hopefully I will have the answer to that next month. Before we take a look at this month's portfolio summary, let's just take a quick look at how it was looking the previous month. I was massively down. My portfolio had more red marks than Sean.
Oh, you got red on you.
Yeah.
Looking at how it stands at the end of October though, I have seen recovery across nearly every holding. In fact, the only holding that hasn't seen any recovery over the month is the JP Morgan Emerging Markets Fund, which has dropped around 6% further than the previous month. This is a holding I wish to ditch as soon as it recovers, but with such uncertainty in the world I can't see that being anytime soon. If I chop it in now, it would be a miracle if I saw an £86 return to make up for the current loss, and if I had such a dead cert, I would be pumping every red penny into it. My overexposure to the UK market is what saw my portfolio drop so sharply and then rise again this month. I think soon I will be on the lookout for new shares to buy. I currently only hold stocks in UK companies, but I may venture from our shores in the future. I keep nearly making a video on Rolls-Royce as honestly I go from nearly snapping up more to wondering if buying them in the first place was the best idea, and that feeling should tell me something. But Rolls-Royce are just a very divisive share at the minute. I said last episode I wouldn't be buying up anymore and then nearly changed my mind the next day. I probably should have gone with my gut there, as they have seen a good recovery this last month and really gained some momentum leading up to their trading report. If I can, then I will go into Rolls-Royce properly, as they're a name that repeatedly come up. I did however buy some more Legal & General shares, and with their dividend being reinvested, I ended up with 19 more of their shares in October. You can see the variation in prices I've paid for LGen over the last 6 months. There is an 80p difference between the highest and lowest prices I paid for them, and on a share that hasn't traded above £3 recently, that is quite some difference. With their plan to keep raising their dividend payout, I should easily reach over the £10 now each payment, so that can be automatically reinvested. I think I will leave that alone now, unless I see a really good opportunity to buy more. The ideal target for the future is to hold some good quality shares that pay me a reliable dividend, and in an ideal world those dividends would spread nicely throughout the year, so I'm getting regular income, but really I'm a long way off that. I'll run through the remainder of my holdings briefly now before I take a look at my premium bonds. Feel free to pause if you want to take a closer look. Let me know below as well how you're feeling about the markets. Has the rate rise made you more cautious, or are you still seeing all these low trading prices as a great opportunity? So last month I received nothing from NS&I. After the prize rate rise I was expecting more, to be honest, so I had high hopes for this month. With the full allocation of £50,000 held, I had one win in November. The lowest amount possible, £25. That same £50,000 in the best paying easy access account, currently around the 2.5% mark, would have netted me over 4 times more, roughly £105. That kind of difference is substantial. Over the last 2 months I've missed out on around £200 of potential interest, which is a little frustrating, but that's the risk I'm willing to take. That's it for today. Don't forget to leave a like and subscribe for future content. Hope to see you soon. Take care out there. Peace.